How I used finance books to get good at day trading. Financial research to improve your knowledge of the stock market, how finance works, how the economy functions as a whole. Nobody will ever be perfect at it, but it's good to learn as much as possible. So, I always wanted to use the stock market. In high school, I worked various minimum wage jobs. No problem with that. That's how it is. I think I made $9 as late as 2015, and I was somewhat frustrated with that because I wanted more spending money to buy more stuff. I wanted a car, I wanted to buy things, go on trips, and even the real estate market is out of touch for Gen Z or even millennials at this point. So it helps for anybody to have as much knowledge as possible, whether by earning more at their job or using their investment vehicles to get more spending power. And so the stock market, what everyone told me, whether my parents or teachers or friends or just random people on the internet, is either buy index funds or have professionals manage it. Just buy into index funds, right? Index fund is the total market. It'll just go up or down, but it's you're not betting on one single stock, or you will lose money. If you don't do any of that stuff, you will lose money if you don't know what you're doing. So that's pretty much the experience that anybody has, the experience that I had. Any newborn and newbie to the stock market is going to have bad experiences if they go rashly into one specific stock based often on hearsay from people they thought were professionals but aren't, and then it just doesn't go well for them. Not because anybody's wrong, but just because a lot of it is luck involved and unpredictability. So my experience with the stock market was a stiff learning curve. I had a bad experience buying one stock. I maybe bought index funds with most of my money, so I was mostly good. And I really wanted to get a 10 bagger or 20 bagger and or just have get really lucky with one stock. The problem is it won't happen quickly. It won't happen within a month or 2 months. We saw in the GME craze, the meme stock craze, that it can if you get lucky and happen to be involved in GME in a early time. But oftentimes, if you find a pick on Reddit and someone else tells you this is a really good opportunity, you're going to be disappointed more often than not. Unless you just buy index funds and passively wait for it 5 or 10 years, then that's the only good news you're going to get. So I wanted to expand my knowledge, get good, and do the research that was needed. And I read Liar's Poker by Michael Lewis. It's a book made in the 1980s about his experience as a bond trader at Solomon Brothers. And this taught me that the bond traders, the financial professionals at hedge funds, analyze the market. They play the highs and lows. They make good deals, but often they don't know what they're doing themselves. It's a stiff learning curve. I think Michael Lewis in his book Liar's Poker had some hilarious stories about financial professionals that made really bad decisions, but the bonds they traded and ended up losing a lot of money for their companies. And it's good to know whether you're making a good deal or not. So how do you know whether the company you're buying, whether it's a bond or a stock or selling short? You read the financial statements, you analyze income statements, balance sheets, cash flow statements. You do some try to get some other information about stuff the company's doing, like products they're making, whether it's going to make money, acquisitions that are coming up. You could do arbitrage, whether a company is about to get acquired by another, and you can buy into the acquisition before it happens to make a stiff profit. And you should know whether you're making a good deal or not on the stock. If you've done the research, you feel confident that you have a good thesis, and there's a 70 or 80% probability of success, then and nobody else knows about it. It's not like the news or it's public knowledge. Then that's a good deal. You could maybe bet a small amount of money, not all of your life savings, and then make the deal. And I've had some success stories with that as well. But if you go in and you think you're confident because of some rumor that you found from an unreliable source, and then uh, the the acquisition that was supposed to happen never actually happens, or the product they're developing is a complete failure, and they end up not making money, and their cash flow statement in the next corner comes out really bad, then you can get shorted on that. I also read Buffett, The Making of an American Capitalist. So Warren Buffett, everyone knows him, how he built up his savings from his childhood. He's got started in the game early. I think he's the son of a congressman from the age 11. He was selling golf balls, and then by age 25, he had 200,000 in savings. That's in 1940s money. So with inflation, that would be up. By the 1950s or age 30, he had I believe $1 million in savings, and that's in 1960s money. And he built that up to become a billionaire by the 1970s and 80s, one of the nation's first billionaires. And that was all just by buying stocks at the right time, watching them balloon, and then selling. He also had to sell the stocks at the right time before they dropped. Whether this whole stock market as a whole would drop or whether one stock would drop. And he just made good decisions. He did the research mostly himself. He was an individual investor that owned his own stock trading company, and then what later became Berkshire Hathaway. I think he bought a cotton mill and turned it into an acquisition company. And he used patience. He wasn't rash. He made good decisions all the time, and did his own research, and it all worked out for him. And he's considered the greatest investor of all time. So the strategies, all the stocks he bought, and the good decisions he made are laid forth in that book. I think it's called The Making of an American Capitalist. What I also read was The Alchemy of Finance by George Soros. Soros also ballooned his wealth. He was an individual investor, so he worked for himself. He didn't have to structure his time around working for a boss. He could just do his research and on his own time, and then read the market. 99% of his success came from making, I think, a few good decisions, like he shorted the British pound at the right moment. And what I really learned was that these top investors didn't have one specific formula they used. They had great teachers and learned about finance, but they used a mix of all their learned and also just raw instinct to make good decisions. If they had one specific formula, everyone would be able to copy it, but they analyzed the micro elements of a single stock by reading income statements, balance sheets, cash flow statements, in order to realize whether that business would be a good investment and whether it's likely to be a good company that's going to grow in the future. And they also used and also a margin of safety in case something goes wrong. They wouldn't lose all of their money. The stock would only go down a little bit. They also made good decisions by macro decisions. So each good decision doesn't rely on one specific formula. That's why it's called alchemy. You take all the different stuff you've learned in order to analyze a specific situation in the moment. And the market changes every day. Something new happens. I think we're getting bombarded with lots of different changes recently with the AI craze and all the IPOs that are happening. And also they analyze the macro elements of the market, such as you need to capitalize on whether it's going to swing up, a bull market, or swing down, a bear market. If you could predict whether the Federal Reserve would raise interest rates, when they raise interest rates, the stock market tends to drop. And if you could do that, if you could short the market or sell your stocks before then, you'll be in the green. If you could predict the market would crash before the COVID-19 pandemic, then you would be in a good spot. And if you could predict the 2008 financial crisis before all the big banks failed and the adjustable rate mortgages led to a domino effect of lots of bonds going bad, then you'd be, if you predicted and sold your stocks at the right moment, at the high of the market, and then bought back at the low, I think early 2009, maybe, or 2010 was when the market was back at its low, and you bought it at the low point, then chances are your money's going to compound greatly by buying the low point. In conclusion, I believe that reading the finance books, doing your own research, it can be a great hobby to have, such as Larry's Poker, The Making of an American Capitalist, The Alchemy of Finance, or even The Intelligent Investor by Ben Graham. I think Buffett refers to that book as his number one stock picking book that he got started reading early, and Uncommon Stocks and Uncommon Profits by Philip Fisher. You can get a huge advantage in learning how finance works because finance is just a part of life, and it gives you an edge over other Americans that don't know about this stuff. And what I'd still recommend is that you have most of your finances managed by professionals, especially if you have a full-time job. You might know about how to do all this stuff, but you just don't have the time throughout the day to check your phone or check the computer about all the big news that comes in that could cause a dramatic swing or drop in the market. And therefore, you could have a small portion of your savings used as a hobby just to buy stocks you like, see if it works, and then have the bulk majority of your savings managed by a professional is what I would recommend. And following the stock market is daily because daily is fun because you can learn about how stuff works, important companies in American industry. You can learn about politics. A lot of politicians are involved in a lot of the big companies, whether they're the tech companies, the Magnificent Seven, or AI. And you can learn about macro stuff like presidential directives that are based on managing how those companies affect us as Americans. And that's just a great hobby to have. So, yeah, it's my opinion on reading up on finance and learning this stuff as a hobby. Thank you for watching.